Yes, hi, Dr. Bob Flower. The Missed Pattern Report from beautiful Scottsdale, Arizona. And this is the report for April 12th, 2011. Well, I'll tell you, hi-ho silver. Man, I am very impressed with what's going on. It sure as hell looks like we're going to hit that $50 projection a lot earlier than what we thought. The big question I have is who the hell is manipulating this? And from everything I'm seeing, it's coming from three primary areas, countries, and people involved with the countries: India, China, and Russia. And for those of you who may think that Russia and China are not a threat, I've got some sorry news for you folks. They are gathering in the hedges to get ready for a new currency, which will be very heavily backed by commodities, principally gold, silver, copper, and platinum. And guess who? Our friends, the Russians, and the Chinese. They're going to try and they're going to make an attempt sometime around September this year to knock out the dollar as the world currency. Now, they've talked about this before. They've never really tried it, but they're gathering steam to pursue that. They're not going to be successful. This is what the master pattern is telling us. They're not going to be successful, not this year, but there's a damn good chance they may be successful next year. And next year, 2012, certainly is shaping up to be one of the most horrendous economic times that we've ever encountered, and social as well. Talking about breaking the law and on all levels, from government right down to your neighbor. Okay, so silver, we've been calling, as you know, for a pullback here on gold and silver. We think it's going to happen within the next week or two. We thought it was going to happen last week, but it definitely is going to happen. And I'm hoping that if it pulls back good, so that down to maybe 32, so I can jump in and buy a lot more. Don't forget, we are totally bullish on silver, and will remain so, I would say, for the next at least 18 months. Okay, let's talk a little bit about what's going on in the world here. We now see Portugal in trouble, and we're about to see Hungary, the Ukraine, and Spain. Spain is really in big trouble. They seem willing to make the sacrifices that are necessary to maybe bail them out, but I don't think the guns are there. I think the EU, this run up in European currency, may be a final hurrah. They can't keep bailing out all 10, 12 of these countries. It's just not going to work. So while a dollar is weak, and you have the stock market moving up the way it's been, and the commodities moving up, those are all very strong signals that inflation is right around the corner. And it certainly looks that way. We've been in a deflationary cycle for quite a bit of time, but I think that's coming to an end with all the spending, and I don't think that there's very much we could do about it. So try and prepare yourselves for that eventuality as far as an investment is concerned. And of course, what is one of the best hedges against inflation? Our good old friend real estate, that some of you just don't want to hear. But let me just say one thing about real estate. First off, the reason why I talk about it a good deal is there's a lot of people ask me about real estate, and they know my background in finance and in real estate, and I know what I'm talking about. And if you want help in investing as a small investor or a medium-sized investor, whatever you may be, or a large investor, I've got some of those. Real estate, and I'm talking about income-producing real estate. I'm not talking about houses, okay, or even office buildings. Commercial real estate, income-producing real estate is hot as hell right now. I don't care whether you're in Arizona, California, Nevada, Florida, wherever you are. It's really, we're finding capitalization rates at 4.5%. The big thing is, though, that the rents are down from where they were a couple of years ago, and the vacancy rates are up. When you correct that, you get that done, you'll be looking at 15–20% capitalization rates on your money. So if you don't care for real estate, that's fine too. But remember the Medicis. Buy to the sounds of cannon and sell to the roars of the crowd. Okay, the news on the political front is this. We told you before that you're going to hear some news about the Federal Reserve. Well, it came out, what was it, a week and a half ago? We missed last week's report. That 90% of the TARP funds went to foreign banks. This is no surprise to us because we've been involved with AIG for almost 2 years now in doing mortgage deals, and they confided in us that not one penny of the $168 million that they were granted went into American mortgages. Not one penny. They're all in South American, Europe, and the Far East. Okay, so hang in there, folks. There's more to come with the Federal Reserve. Obama's strategy, which I think, you know, on one hand, is very clever. With healthcare, is now to do a reform, leave it in place in name, so that he'll get credit for it. But he's going to push for reforms. Because they all know that they're going to get their ass kicked in the Supreme Court. So that's you can watch for them to make that switch, and it could end up being a very positive thing. Let's see what happens. You know, he seems to be trying to bend as far as he can to the moderate branch of the economic spectrum. Okay. I do have an announcement. We are testing right now, real test on a process, a procedure using the master pattern for predictions, market movement predictions. You know that we do excellent on the calls, time calls. We think we've found a way of moving in and doing a good deal more accuracy on the price direction. So stand by for that, and I'm going to love to talk to you about that. We're going to go another month with this and see how it works out. Hey, from beautiful, sunny, terrific Scottsdale, Arizona, I'm breaking them on you. Have a great one. Enjoy yourself, and we will see you next week. Sorry for the delay and the screw up.